And joining me now to share more is Ben Barber. He's the SVP and Director of Municipal Bonds at Franklin Templeton. Welcome to the New York Stock Exchange.
Thank you very much. Great to be here.
So I understand it was your first time ringing the opening bell. What was that moment like?
Very stressful. No, I'm just kidding. It was totally fine. It was very exciting, much more exciting than I had anticipated. It was great.
Yeah, a lot of pressure up there. You know, when to ring it, how long to ring it.
Yeah, exactly. 10 seconds on and that's it. But it was great.
All right, so tell us about these 10 municipal bond ETF offerings from Franklin Templeton.
Yeah, absolutely. It's we're really excited about it. This makes us the largest by number of funds actively managed muni ETFs in the market. It's a bunch of state-specific muni ETFs, as well as a whole national suite of muni ETFs, depending on different risk tolerance levels.
For our viewers who are not familiar with this type of asset offering, what is a muni bond ETF?
Yeah, well, first of all, municipal bonds are the lifeblood of the U.S. economy. It's how we've financed most of the U.S. infrastructure, bridges, toll roads, education facilities, hospitals, et cetera, across the United States. Muni ETFs are just another format for investors to be able to access the municipal bond market. Quite different from open-end funds, closed-end funds, separately managed accounts, or individual bonds. So muni ETFs, it's a great investor choice for a lot of investors.
And because these are bonds, are these typically safer types of investment? What is the risk level here?
There's always going to be credit risk associated with anything, but yes, in general, the municipal bond market is very high credit quality on average. Defaults are exceedingly rare. So yes, in general, municipal bonds are a very safe credit alternative.
When you say Franklin Templeton is committed to investor choice, what do you mean by that?
I mean that we invest munis in lots of different formats for investors. Open-end funds are a great choice for some people. Muni ETFs are a more and more popular choice. Separately managed accounts can be very customized for clients, and so we manage in all of those different formats for clients, across the country.
And why are these organized and separated by state? And can you tell us which states have offerings?
Absolutely. They're organized by different states because of the tax exemption. So the beauty of municipal bonds is the interest that gets kicked off of these municipal bonds are federally tax exempt. And in some cases, they're also state and local tax exempt. So that means for the investor, if you're in California, if you're in New York, you pay your federal taxes as well as your state income taxes. These state-specific funds can be exempt from both federal and state taxes. So they can be very attractive for people paying taxes in the U.S. and people paying taxes in a specific state tax domicile. That's why we've done it. And here what we've done is we've converted open-end funds into ETF format for investor choice, and we've done 7 state-specific muni ETFs and then a suite of nationally diversified ETFs as well.
All right, Ben Barber, SVP at Franklin Templeton, thank you so much for joining us, and thank you for ringing the bell today.
Absolutely, thanks. It's been a pleasure.